All right, let's go ahead and get started. First of all, thank you all for your time and for joining us today. This is part of our ongoing Rental Expert series. This webinar is From Renter to Ready, turning renters into buyer clients. Again, part of our Rental Expert series that we do in collaboration with NAR. Let me start by introducing the speakers. My name is Josh Taylor. I'm the Vice President of Operations at Rental Beast. For those of you who may not know, Rental Beast partners with MLSs and realtor associations across the country and in Canada to provide tools, data, and expertise around doing rental transactions. And I'm very excited and fortunate to be joined by Ryan from Leader Bank. Ryan is a loan officer at Leader Bank. He's been there around 10 years. Has originated around 200 million in mortgages during that time, and he's done a lot of work with first-time buyers. So we're very excited to have him on the recording with us. In terms of what we're covering today, we'll start with a general overview of why renters and rentals matter and how they relate to buyers. We'll go through some of the signs that you as real estate agents and realtors should be looking for when you're trying to understand if you have a renter client or a buyer client that you're working with. We'll also hear from Ryan about tactics and strategies to help you turn renters into first-time buyers. We'll include some information as well about overcoming objections and hearing about and dealing with these common concerns that your renters may have as they're thinking about buying. And then we're going to end with some key takeaways and a question and answer session. For those of you interested in asking a question, please feel free to drop it in the chat as we're going along. And at the end of the presentation, we'll try to cover as many of these as we are able. All right, let's go ahead and get started. We wanted to start with what does the rental market look like and how is it related to the buyer market, particularly the first-time buyers. So at a high level, NAR tells us that approximately 70% plus of first-time buyers are coming from rentals. So as you're thinking about the pipeline of first-time buyers, the channels that you can tap in, renters are the largest channel of first-time buyers. So this is a great place for you to be focused. In general, renters and renter households make up around a third of the housing market in the US. As you get closer to suburban and urban areas, that number can increase to 50%, 60% of the households. So if you are in the business of helping someone find a home, which all of you are, you certainly want to know about rentals, but when you're focused on converting first-time buyers and dealing with first-time buyers, rentals are also a great place to focus. That's a snapshot. What does it look like in terms of, is this a growing pipeline, a shrinking pipeline? Well, probably unsurprisingly, it's absolutely growing. Some of the stats that we thought were interesting on the left, around a third of renter households are making $75,000 or more in income. This is almost a 10% increase year over year. So not only is the renter population growing, the population of renters with higher income also is expanding. So I think that's a pretty interesting and great knowledge for you to have as real estate agents. I think the green box on the right is perhaps some of the most interesting statistics and information we have in this presentation today. This was a survey done by Zillow recently, and the Zillow team was surveying renters who had recently moved into a rental. I think all four of these lines are very interesting and very telling and should be something that you're thinking about as you're positioning yourself as a real estate agent. So let's go through these quickly. 25% of recent renters seriously considered buying. So the folks that ended up in rentals, 1 out of every 4 was seriously thinking about buying, right? 64% or 2/3 of these renters considered buying. So as you're dealing with someone who is looking for a rental, it's very likely that you're dealing with someone who is thinking hard about buying. And you as the realtor want to think through that. Anytime you're dealing with a renter, you want to ask them, are you also considering buying? This is something that just should be part of your rental process. The next two bullets, 37% of renters plan to buy when they next move. This is a great data point for the idea of keeping in touch with your renters. So when you place someone in a rental, 6 months from now, 8 months from now, when they're probably going through this decision process of should they renew their lease or not, you want to be in touch. They indicated that they are interested in buying when they move. So this is a great chance to reach out to them. And then 42% of renters are likely or very likely to buy if rates drop. Again, this is another reason to stay in touch with your renters. They are renting, but they are thinking about buying. They're looking at rates. You're looking at rates all the time as well. If you see movement, great opportunity to reach out to your client and let them know what they could potentially be buying. So I thought the information, particularly on the right, was incredibly valuable and just reinforces the idea that you as a realtor, as you're working with a renter, you want to just ask, are you also considering buying? I'd be happy to show you what that looks like. And even if you place them in a rental, you want to reach out and stay in touch with them. In terms of some of the things that are making it more favorable, if you are a renter thinking about buying, and of course, if you are an agent working with renters, is increasingly we're seeing more and more down payment assistance programs. We're seeing, and legislation can be local, it can be federal, but we're seeing a lot more around politicians trying to do more to promote ownership and affordability. Mortgage rates, they're a lot lower than they were this time last year. So that's great perspective, and I think Ryan will probably talk to us a little bit about that as well. Concessions, oftentimes lenders will offer something to make it a little less expensive on the upfront side, so including Leader. So there's some great opportunities there. And then I think this is one of the most interesting ones and something I would encourage you to keep in mind, and I will give you a tactic that you can use tomorrow or today. Local matters. The cost gap between renting and owning is narrowing in multiple markets. In some markets it's not, in others it's absolutely narrowing. And by this, what we mean is how much are you paying per month? So if you purchase a place, every month you're paying the mortgage, you're paying the principal and interest, you're also paying taxes and insurance most likely. And when you rent, you're paying the rent. So what does that look like? And we pulled data from a few different markets. Leader contributed some data from a few of the states that they work in. And let me just read across one of these rows and then let's talk about this. So for the Atlanta MSA, think Atlanta and beyond, the monthly purchase cost is going to be about $2,500. So if you look at the median price to purchase and you figure out what a mortgage would be on that, plus local taxes, local insurance, you're probably going to pay about $2,500 as a median number. This is about $700 more than you would pay for a typical rent, right? So the spread in Atlanta is pretty high between buying and renting. However, as you move down this chart, Miami, very interesting. You would actually expect to pay a little less per month if you bought versus rent. Let me stop for a second there. Miami, Ohio, the state of Florida, you're actually expecting to pay a little less if you buy per month than if you rent. Texas, it's about the same, about a $4 differential. North Carolina, about a $175 differential. These are small numbers in terms of the ongoing monthly cost. How would I use this tomorrow with one of my clients if I was a real estate agent? Well, I would make sure that if I'm dealing with a client who is looking for a rental where the rent is at or above what a typical mortgage payment would be, I'm going to ask them and I'm going to let them know that they're looking for a rental that is at or above the typical monthly payment for a house. If I am representing a rental where the rent on that is at or above what you would expect to pay for a typical mortgage payment, everyone coming through and looking at that unit is someone who potentially can buy. So as a local real estate agent, it's not hard. These numbers are very available. It's not hard to figure out what a typical mortgage payment is or a typical purchase payment is in your area. We're happy to help you with that as well at Rental Beast. And you can start to understand that versus the rents that your clients are looking at. So you very well may be dealing with people who would be spending the exact same amount, whether they purchased or they rented. And I think your job as the agent is to bring that conversation to them. You're the expert that understands what they may not. All right, so let's look at who the renters are today. And the line is blurred between renters and buyers, but by helping you understand who renters are, what first time and what buyers look like, you can start to say to yourself as you're kind of going through your rental clients, this person looks a lot like a buyer. So what do we see? Well, around 1 out of every 5 buyers is a first-time buyer. The median age of a buyer, we have 40 years here. This is, I don't know if you follow things like this, but this is fairly contested in data circles. I've seen anywhere from 36 years old to 42 years old from very reputable sources. Let's call it late 30s is the median buyer age. Oftentimes you have committed relationship, married couples that are moving into these first-time purchases. Oftentimes folks have kids that they're dealing with. But in general, if you are working with someone who is going to rent at an amount that's very similar to what they would pay to purchase, they're in their 30s, late 30s, 40s, they're married, they have kids. These are all things that in your mind you should be saying, I should at least bring up the conversation of, are they considering buying? If not, perhaps what's preventing them from buying? Leader Bank also provided us with their statistics. So looking over the past approximately 15 months, who has taken out a loan from Leader Bank as a first-time buyer? Some of these stats are exactly what you think, and some are pretty surprising, at least to me. So the median buyer age for Leader Bank and their mortgage department was 43 years old, so a little older than some of the things we typically hear. The average down payment, 25%. That was very surprising to me. What is not surprising is clients often have funds that you may not be aware of, and we'll talk about where these down payment funds typically come from. But don't assume that your client does not have the money for down payments. Renting before purchase, they were in a rental for 6 years, a little lower than I would have thought, but I thought that was very interesting as well. And then 6 years of job tenure. And I think this speaks to someone becoming comfortable with the fact that they are financially stable, their finances are predictable, and they can take on a home purchase. What else do we know about our renters and our buyers? Well, when we look at Gen Z, 86% want to own a home. So, and it's very rare that you hear any sort of counter narrative. This lines up nicely with what you are almost always hearing, in that people want to own. They just are unable or don't understand how to. So this is this younger generation is very consistent with what we've seen before. People want to own. I think the slide on the text box on the right is very interesting. 30 years old is the median self-estimated age of a first home purchase. So Gen Z is saying to these surveys, we see ourselves buying around age 30. Now the reality is they're probably going to be buying later on in their 30s, based on what we're seeing from other statistics about who first-time buyers are. But let's think about this as realtors. When you're dealing with someone who's in their late 20s or their early 30s, the desire to buy and the expectation to buy is there, right? So how can we make sure that we are helping these renters understand what they may need to do to buy? Just by giving them that information and staying in touch with them and helping them think through this, you're positioning yourself as the agent to help them once they are ready to buy. All right, a couple other things that we know about renters and first-time buyers. Median down payment, around 10%. The myth of 20% down is exactly that. It's a myth. Ryan will talk a little bit about this. He'll talk about likely the cost of PMI, which is lower than most people expect. But we just simply are not seeing 20% down as the norm. It's much closer to 10% down. How are people paying for it? How are you generating that upfront money? A number of people are doing it from savings or from financial assets, think investments, finance programs. And then there's a good portion, 1 out of every 4, 1 out of every 5 people are getting this as a gift or a loan, perhaps from family. And then finally, what are we seeing that actually triggers the decision? They have the money, they want to buy. Why are they waiting? What changes? It usually fits into one of these categories. Life changes being probably first and foremost. I need more space because I'm now married or I have a kid, or perhaps something happened at work that makes me feel better about my financial outlook. Lifestyle control, pets, being able to do what you want to do, being able to have a little more space or a yard. These are all things that often trigger the first purchase decision. Rent fatigue. When you're talking with clients that may be looking at their next rental, you can hear it in their words and their voices, right? They're sick of paying more and not being able to own anything. All great chances to introduce the conversation of buying. And of course, perception of security. Someone who feels good about their job, who's been there a while, they're feeling a little bit more about the predictability of their finances. All right, so what we've walked through so far is the idea that renters are a massive channel into first-time buying. What we've also walked through are some of the things around, as an agent, what you can be looking for and thinking about as you're trying to identify buyers. Depending on your market, there may be a very small gap between what you would expect to pay for rent versus ongoing monthly cost of a purchase. If you're dealing with someone in their late 30s, someone who has kids, someone has rent fatigue or wants a little more space or a yard, these are all great conversation starters to talk to them about potentially buying. So with that, let me hand it off to Ryan, and he's going to walk us through again some strategies and tactics to help us.
Thanks, Josh. So these are just some statistics about our bank. This is not a sales pitch or anything about our bank, but this just kind of gives you a scope of who we are, how big we are, and the type of volume. So we are the largest lender in Massachusetts for 2025. That just means of all the mortgages that were originated on the purchase side in the state, Leader Bank did the most of them. So, I won't bore you with that, but that just gives you a scope of who we are.
Oh.
Did we miss one, Josh?
Oh, I'm sorry.
Okay, all good. So these are some of the signals to kind of get an idea if a renter is ready to buy. So, these are kind of the 3 things that I discuss when I'm meeting with somebody who's interested in buying and they're coming to me on the loan side of things first. So first is, we talk about the credit profile. Is somebody's credit in good shape where they can actually qualify for the loan? We at Leader Bank, we typically look for a 620 or higher. There are other programs out there that could potentially get somebody approved with a lower score. But we want to make sure that their credit is in good shape. Next would be the debt to income ratio. So do they have the income to qualify for the type of loan that they're looking for? So, we talk about estimated price. One of the first questions I always ask is, do they know what it costs to buy in the area that they're looking to live? Sometimes a client will come to me and say, how much do I qualify for? I really don't know where to begin. We can obviously give them some parameters, but, the question I always ask is, can you find something for 200,000? Is it 500,000? Is it $1 million? Right? And then we sort of back into, do they have the income to qualify? Next would be on the income side. So how do they get paid? Do they work for a company and get a traditional W-2 pay stub? Are they self-employed, which that comes with its own set of potential challenges? Maybe I'm working with a retired client, right? I've worked with plenty of retired clients that are buying for the first time that maybe are on Social Security or pension. So we will take a look at that. And next would be the cash to close. So this is the down payment, closing costs, things like that. So do they have the savings to make it work? Are they eligible for potential down payment assistance programs? Is there a way that we can come up with a plan for them to come up with the money they need to make this all happen? So these are some of the, Josh mentioned some of the behavioral signals. So asking about the area, so are they looking to live somewhere long term? They start talking about the schools, distance to maybe where their employment is. So they're thinking about being there long term. Rent fatigue. So, if they're really getting fed up with paying rent, maybe their landlord has increased their rent a few times, then, they may be interested in looking to buy. You can go to the next one. All right, so this would kind of be a little bit of a timeline of sort of the initial conversation with a renter to, kind of getting them over to the lending side and make it. So first, we talked about the signals, rent fatigue, talking about being somewhere long term. That's what you would start asking about potentially buying. And then, probably the question may be, well, I don't know how much I qualify for. And that's when you would introduce into a loan officer. From there, we can have just sort of an open conversation about their timeline. What do they have for savings, potential down payment assistance programs if somebody needs that. And then if we think that there may be a fit, then we can actually move to an application and finalize a pre-approval for them. So these are, some of the loan programs that you may see. So majority of clients, we would look to put in a conventional loan. You can do those with as little as three. First-time home buyers could qualify for as little as 3% down. So you can even do a lower down payment than an FHA. Private mortgage insurance. So Josh mentioned that, one of the things I hear a lot, clients think that PMI is so much more expensive than it really is. There's been some new vendors that have come into the market and has created competition that has sort of drove the price down a little bit. So if I'm working with somebody that has good credit, it's usually a lot cheaper. One of the things that we will recommend, or a way that you can negotiate if one of the objections is they don't want to pay PMI. We are seeing a lot of seller credits out there. You could negotiate a seller credit, and they could use that seller credit to pay a single paid PMI. They can pay all of their PMI up front using that seller credit, and they don't have to pay it monthly. So that is just a negotiating tactic that agents can use as a negotiating with the seller. So FHA is still available, still a good program for certain clients. And then VA, great program for veterans. You can do it with zero money down. That definitely comes with pros and cons to it as well. But if they're eligible, no PMI, certainly can make sense for certain veterans. So these are some of the other support options that we've seen. So I mentioned down payment assistance. So these typically come from the state and local programs. So we're based in Massachusetts. We have something called Mass Housing. There's all different types of programs based on income levels to determine if somebody would qualify. You can certainly check whatever state you guys are operating in and see what's available. Co-borrowers. So you may see like mom or dad co-sign. That can certainly help somebody qualify. So I actually just got off the phone before this with a father whose son is going to be starting a program here at Harvard, and he's making like 40 grand a year, and they want to get him a condo. And here in Boston, 40 grand doesn't get you very far. But I talked to the dad. He's open to co-signing, uses his income, and help him, get a condo in the area for his, for his, I think he's getting a doctorate program or something like that. Um, so, mom or dad could potentially co-sign, grandparents, things like that. Gifts. So one of the trends that we're seeing a lot is you have a lot of parents who are sort of, potentially sort of in that baby boomer area. They're sitting on a lot of equity in their homes. Stock market has done very well. We are seeing gifts come in fast and furious. I think from a lot of parents' standpoint is we are seeing that they prefer to give the money now to their kids before maybe they pass. So obviously it can be a tough discussion asking a renter, do they have parents? But certainly, I'm sure there's a great way to bring that up. Grants would sort of still be in that state programs that are available. So here in Massachusetts, we do have some grant programs, $25,000, basically free money. They can be very difficult to qualify for. They have to check a lot of boxes, and it's usually a very specific type of buyer. You can't make too much money, but you have to make enough to qualify for the loan. So it's always a little bit tricky, but if they qualify, it's a slam dunk for them.
And Ryan, just one thing to mention on the gifts. What I've heard from agents about bringing up that exact topic is just using the stats. So agents, when they're talking to their clients, realtors, when they're talking to their clients, will say, here's what we are seeing people do to fund the down payment. I don't know which would be right for you, but one out of every 4 or 5 people may get help from their family. So it's from what I've heard from agents, it's a very easy way to approach that conversation. I'm just sharing some of the data with you, right? What group do you fall into?
All right, so see, these are some of the things that we see buyers do that, can be problematic as they're purchasing a home. So first would be new debt. I currently working with a client that they make great money. They're buying a multi-million dollar home, but with high interest rates, their debt to income ratio is right below. Husband went out and bought himself a nice new BMW, $1,500 car payment, and we're now scrambling at the last minute to try to rework some of the numbers. I think they'll still qualify, but these are stress points that some clients can potentially avoid. Job changes. So that this is something that is very important for them to speak to their loan officer about. If they're thinking about changing jobs, have that conversation, especially if somebody relies on commission, bonus income, that really can change the outlook for somebody in their timeline. Moving money, obviously this could potentially be an issue. Over the years, we've had some times where random deposits will be sent in, and it can be a real pain. A couple of years ago, I was working with a client. She was buying a home. She came from a Chinese family. We had all these types of cash deposits in her bank account because she was saying she got money from, I think it was Chinese New Year. And she said it was all cash, and she was just kind of slowly going to the ATM, just depositing all of it, and it just became an absolute headache. So that can be a challenge. Tax and insurance misunderstandings. This one always surprises me when we're talking about first-time home buyers. They never fully understand the cost of property taxes. And it's not even so much when they're buying it, it's after the fact. So many times you'll see a number and they're budgeting there, and then the town gets a hold of the property, they get a hold of the transaction, and then they change their property tax amount, and now their payment is $500 more than they were budgeting for. So these are the things that we try to coach and make sure that the client is aware that things could change, in a handful of months with their payment. And last would be rate fixation. I honestly think this could potentially be the biggest mistake, because this is keeping clients on the sidelines for a lot longer. I think the next slide is a chart on sort of where the 30, it may be coming up, but there will be a slide that sort of talks about the 30-year fix and how it really hasn't changed so much over like 4 years. And I've had so many clients over the handful of years now. I've just said I'm going to wait for rates to drop, and you'll see it just hasn't done that. So this kind of goes into, what should they expect in terms of how much cash they have to make this all come together. So first would be the down payment. We look for 3 to 5% typically for first-time home buyers. But we are seeing with clients getting gifts, a significant, larger down payments in this. Prepaids and escrows. So, depending on the tax schedule of where the client is buying, will sort of dictate how many months of property taxes and home insurance we'll have to collect. In some states, we may need to collect 10 months of property taxes. That's just based on how the schedule is. So that can certainly be a cost that a client is not expecting. Closing costs. So in general, with sort of the average loan size, we're seeing about 6,000 to 8,000. It can be as much as, this says 10. It could be significantly more if they live in a high cost of insurance state, high property tax property, things like that. And then last would be this is something that a lot of clients don't think about, is what's in their bank account and usable after they close on the home. I closed on a client on a VA loan a couple years ago. So they did it with no money down, and they really had no money down to do. They had just enough for the closing costs. I spoke with them last month. They are going through some financial troubles. Husband is on disability now. And it was a really tough phone call. They wanted to try to refinance, to try to, get under the payment a little bit. Their credit score took a beating from what's going on, and unfortunately we had no options for them. And many programs, we don't require them to have a certain amount of liquid funds after closing, but I think this is sort of one of the more important things that aren't always talked about. And this, so these are things, as you're talking to renters, talking about, do you have the money for the down payment, closing costs? How about when you're done, do you have, money if something breaks? So these are, some of the objections that you probably typically hear. The first is always gonna, rate is the biggest thing. So, I think you'll see in the next slide that mortgage rates they really haven't moved so much in about 4 or 5 years now. And one of the tactics we do is we can show a client different payments based on different interest rates. So this says here, every 1/8%, usually around a $30 difference on a $400,000 mortgage. And the clients will start realizing that, okay, well, even if the rate was a 0.5% lower, it's not going to significantly change my payment where you're going to notice it on a month in and month out basis. Go to the next slide. All right, so this is the chart I was talking about. So rates really started to kind of start going up in the middle of 2022. and then, kind of reached over 7% towards the end of 2022. So, the clients are always trying to tell me that, they think rates are going to go down. Um, and, I've been hearing that for, almost 5 years now. And, there have been pockets of time. Recently, sort of as the year began, rates were, they ticked back into the fives. Average rate was about 5.99. And then, we've just seen that rates continue to be very, very stubborn. It's just been, it's hard to, get down there. So, I think there's the other side of not buying. So you lose on an equity built, um, and we say you can always refinance later. There's programs out there. We can always, give lender credits to offset some of the closing costs on refinancing. Um, but you can just kind of see that rates they just haven't moved where most consumers would want them to be. So next, a lot of people they still think 20% down is the golden rule. And sure, in a perfect world, that would be great, but you don't need it. 3 to 5% down would get it done. Um, so we can also find other ways to get them qualified. So we can look for down payment assistance programs. Um, Potentially, they may have some funds to pay off existing debt. So maybe they have a car loan that's causing some issues. Maybe we can find ways to get that paid off. Maybe they have some cash on the side. There's 401k loans, things like that, that potentially could be an option and a solution for the client. Um, but as long as somebody has like 3% down, we typically can find a way to make it work for them. So a lot of clients still think that, you have to be a W-2 employee to qualify. That's not always the case. Um, we deal with a lot of self-employed clients. The self-employed clients think they need 2 years history to be qualified. That's not always the case either. And sometimes we can get you qualified with only like a year and a half. If they had a really good year one, um, and maybe they only have 6 months uh, for the first year, and then another year, we can maybe average the two and still get them qualified. Um, we work with retired clients a lot. Again, there are things that we can do with their retirement account balances to get them qualified. So, there's plenty of ways to help a client. And if we really have gone down the path where they don't qualify, we put together a game plan and a timeline of, when they would be eligible. All right, so, how loan officers can, we can support your clients. So first is just starting the conversation. I think this is sort of the hardest part for some. They don't know where to begin. They don't know who to reach out to. There's hundreds and hundreds of places to get a mortgage, but who they select and where they go, they still struggle. So getting them in front of a loan officer is step one. Then walking through the numbers. Okay, get an idea of what type of home they may be interested in. What's it cost to buy that home? What do they have for down payments? And then let's look at the numbers. Many times, the monthly payment could be very similar to what they're paying in rent or not that much higher. And then they start realizing that it's a lot more affordable than they think.
Ryan, I would just also kind of interject here. I hear from a lot of agents. It didn't really occur to me, but talking with agents, I hear that this is a great way to progress the conversation. So if you are a realtor, you have a renter client, what could be easier than allowing them to connect with an expert and get guidance on what they could actually afford, uh, where their problem areas are for improvement? It helps you move this and progress this towards a purchase without
Mhm.
doing much. You're just giving them information. And for those of you who may not be aware, it should cost your clients nothing to talk to a loan officer. They are happy to give them advice. And loan officers want to work with a real estate agent. So there is no risk of the loan officer taking this client and then providing it to another agent. They want to have an ongoing relationship with you, I promise you. So what could be easier? Your client's getting a free financial analysis. They are understanding exactly what they could afford and perhaps what they need to do to be able to afford more. And it's just a very low pressure sales tactic to continue to progress this person towards a buyer.
Yeah, I mean, I think a lot of clients they just need the motivation. They need the nudge to keep going. You know, it's you have that initial conversation, you're sort of putting it in their head that home ownership is closer than they think, and then potentially they just kind of stop. You know, by getting them in front of a loan officer, that continues the conversation. Now we do an application. Again, they continue to keep the steps, and there's that momentum versus, you know, just they a lot of times they just don't get as far as they could. You know, life gets in the way, things like that, and that's where we as loan officers have to support and keep up to date with the clients and vice versa, getting them in front of the loan officer, getting an application in, kind of doing all that. All right, so when should you introduce a lender? For it, so I would say in most cases right away. It really, I would say, it really depends on your renter client. Um, you know, if you're working with a renter client that seems like they've checked all the boxes, it seems like they have good employment, they have the assets to make it work. You know, I'm sure you can, you know, you kind of can tell the difference between somebody that kind of has it all together versus somebody that will need a little bit of help. For the clients that do need a little bit of help, getting them in front of the loan officer is the best way to go. Those are the clients that you see kind of just need the nudging to keep the conversation going. The other clients that sort of seem like they kind of have everything together, maybe they're renting for lifestyle reasons, whatever it may be. But in general, speaking to a lender right away is going to be the best bet.
It's also going to help you as the agent make sure that they are realistic about where they are and what they may be able to purchase. So it certainly saves the realtors time and effort as well.
Okay, so these are some questions that, you know, you should be asking a loan officer, you know, about the client, understanding what loan programs the client may qualify for. You know, is it going to be sort of your standard conventional client? Are there credit challenges or down payment issues? And, you know, we have to go FHA. Is it a veteran? You know, each of these loan programs come with their own set of unique challenges. FHA, VA, especially on the appraisal side, right? So understanding what programs the client may be qualified for. Talking about the monthly payment, you know, that's always for many first-time home buyers that they're going to be fixated, you know, on what that looks like. They're going to compare it to what their current rent is. So getting a sense of what kind of loan they're looking for, what the monthly payment would look like. Getting a good sense of the closing costs, right? So there are certain states out there that are more expensive to buy in. So you know, we work with a lot of clients here in Massachusetts that are moving to New Hampshire. New Hampshire, the closing costs are typically 50% more than they are in Massachusetts because of the state fees that the buyer has to pay. So many times the clients don't realize that. So giving them a number of how much money they have to have in their bank account is very important. Next would be how competitive the client's pre-approval is. So, we get a lot of questions about, soft credit checks, hard credit checks, things like that. So, here at Leader, we only do hard credit checks. We do that for a few different reasons. One, it gives us the most data. It gives us everything we need to know about the client. So when we put our name on the pre-approval, it's like gold. So um, the next thing a client could do is we have a program called Purchase Pass. It's a fully underwritten approval. We recommend clients who are looking to buy in the next couple of months to go through that. We give you a full commitment letter, so you can use that in lieu of a pre-approval letter. We always recommend that. Um, we go through clients' income, assets. We go through everything. Where there's a lot of pre-qualification letters floating through the marketplace. I'm sure you've all seen them when you're looking at offers, and a lot of clients just don't get their offer accepted because they haven't done enough with their lender. Um, so we recommend clients do the full pre-approval. And then what should my client avoid before closing? We've talked about the pitfalls that some clients will do as far as taking on additional debt, moving money. So we give all that information up front to the clients, so we avoid that as we're approaching closing.
All right, thanks, Ryan. So quickly, just something that is available through RentalBeast. We're calling it RenterLift. It's a platform that helps you as a realtor nurture renters into buyers. Typically, what we hear is, that's great. I understand that a lot of first-time home buyers are coming from rentals. I understand a lot of my renters can buy, but it's still hard to help nurture and convert. So RentalBeast, right now we're piloting it in, I believe, 3 or 4 markets, but very soon to make it a national rollout. And essentially, our RenterLift platform is, you send renters, you invite your renters into the platform, and we'll let you know when they're ready to buy. Your clients are your clients. Again, our core market is Realtor Association, MLSs, agents. So your client is your client. We don't get between you, but essentially you're inviting your clients into RenterLift. We give those clients education, budgeting tools. We help them understand what they could afford, including looks at actual houses on the market. And as they are taking actions, we keep you informed. So the RenterLift platform, again, it's being marketed in multiple cities. It should be national pretty soon. And the idea is, renters turn into buyers. Let us make it easy for you to nurture. We have a QR code up there. If you're interested, you can join the wait list. We'll let you know when it's available in your market. And it's certainly possible it's already available in your market, including Florida, North Carolina, Texas, a couple other areas. So please feel free to sign up, and we'll let you know as that is available where you are. All right, in terms of takeaways and Q&A, first of all, key takeaways. Again, if you're in the business of helping someone find a home, renters are up to half of the market if you're in urban and suburban areas. Across the country, it's around 1/3 of the households. It's something you want to be familiar with. When it relates to buying, somewhere around 70% of first-time buyers are coming from rentals. So it's a huge channel for you that you should be able to tap into. A lot of renters are already thinking about buying. They're already close to buying. So they're going to buy the next time they move, or they're watching rates. These are folks that you want to stay engaged with. You want to position yourself as an expert. So you're dealing with them. You're able to take them around as they're looking at properties. Ask them, are they thinking about buying? If so, what does it look like? If not, what are they perceiving as standing in their way? And this is how you get the ball rolling. Keep in mind that you can introduce a loan officer. What a great selling tool to allow this person to talk at no cost to a local professional about getting a mortgage. They don't have to actually go through with it. They don't have to pay. There's no commitment, but they can understand what they can afford and what they could improve to make sure that they get the mortgage when they're ready. So think of your loan officer not only as critical to getting your client into a house, but also as an up pipeline, kind of an up funnel sales tool that you can use as well. All right. With that, we'll do some questions. I see a few in the public channel and a few in the private channels. So let me try to get through these. Ryan, I think mostly they'll be for you. First of all, though, we are going to send out a recording of this call. So I see some questions on that. There will be a recording of this available. All right. So Ryan, let's see. We've got, all right. What credit score range are lenders typically looking for right now?
So, I mean, we look for a minimum of 620 here at the bank. That's sort of our internal policy. As far as like what range, I mean, as long as you got a 620, that's typically good enough for us. But it also depends on the quality of the 620. So, somebody may have the score, but if they have certain delinquencies, they still may not get an approval. So, as far as the range, just get it above 620 and then go from there.
And Ryan, do you see other lenders going lower than 620, or is that a line in the sand for most?
Yeah, I mean, I think some FHA programs out there can go as low as 580. They're still out there. But again, it depends on why the credit score is there. They can have the score, but if the quality of the credit is very, very poor, missed payments, charge-offs, things like that, then they could still get denied.
Gotcha. Thank you. Next question. When clients are exploring home ownership, should agents consistently work with the same loan officer or provide multiple options? How do you think about that?
I think options is always great. It would, one is because it could potentially give them a certain different perspective. They can work with different personalities. I think I can work with all different types of personalities, but sometimes it just could not just be a right fit. And then also you don't feel like you're steering a certain client. They can choose. And then that gives them the look like you're looking out for their best interest.
Gotcha. And I'll say as well, at Rental Beast, we do annual surveys of agents annually. And it's, I believe it's typically, we ask agents how many loan officers they typically use or recommend. And I believe it's somewhere right just over 2 on average. So that corresponds nicely with what you're saying. All right, next question. How long does the pre-approval process usually take for a first-time buyer?
I typically quote most clients like 1 to 2 business days. It's typically pretty quick. It depends on the client. If I'm working with somebody who sort of has a more complex financial situation, self-employed, things like that, then it certainly can take longer. But if I'm working with somebody who is sort of a standard W-2 pay stub kind of employee, it's pretty quick. And then if for whatever reason, we can't get them qualified for the amount that they're looking for, then we could talk about scaling back the pre-approval. With high interest rates and high cost homes, we're seeing debt to income ratios be really towards the max all the time. And, the client wants to be confident when they go searching for a home. And many times from the lender's perspective is, I can't get you a $500,000 home because I have to estimate some of the variables. I don't know what the rate's going to be. I don't know what the property taxes are going to be. I don't know what the home insurance. We can estimate. We're pretty good at what we do, but it's always going to be a little bit different. So one thing we always suggest is we'll do the best we can now, and then go look at homes sort of in that price point. And if you like that home and you want to make an offer, send me the listing. That way I can look up the property taxes. I know exactly what the rate's going to be, and then maybe we can increase the pre-approval for that particular home that you want to buy.
Okay, very helpful. I know so for the next question, I know you've touched on some of these during the presentation, but the question is, and maybe it's specific to renters, what mistakes do renters make that can hurt their chances of getting an approval, a pre-approval?
Well, I think it may not just necessarily be renters. I think all buyers can make mistakes. The example I gave of the husband going out and buy a BMW, they were not first-time home buyers. They're selling a multi-million dollar home, buying a multi-million dollar home. So it's not just renters. Um, I think the biggest mistake renters make is just not starting the process. I think most want to buy a home, but how do they start? How do they continue with the process? Those are kind of the mistakes. There's just a lot of fallout.
And I think we've got time for one or two more. Uh, for the credit score, when you mention credit score, is that a traditional credit score or one of the enhanced models? Can you help our listeners understand potentially the difference, which one is used? Just a little more color on that.
Yeah, so we most mortgage lenders are going to pull more of a traditional model. Um, so when I'm talking to a client and they tell me their score, they typically see it from, the free score they get from their credit cards or whatever. Those tend to be Vantage scores, which do tend to be a little, you know, jacked up a little bit higher than what we typically pull. Um, I mean, there has been some movement and some talk about, starting to use the Vantage score. I don't know when that will come. So, I mean, when a client tells me their score, I always factor in it's probably a little bit lower than what we'll pull. Um, it's amazing how many clients tell me they have the best score you've ever seen. No one's score is higher than theirs. And then you pull it, then it's like a 760, which is fine, is a good score, but certainly not the highest we've ever seen.
All right, I think we got one more. Can individual borrowers apply directly for a home buyer grants? Can you help us understand that a little bit?
Yes. So these are going to be at the state level, so I can't speak on, how Ohio does it or Indiana or wherever it is. Um, here in Massachusetts, we have grant programs. Right now, they're specifically with the city of Boston. So it's kind of like yes, individuals can apply for that. So they have to qualify for the loan and also qualify for the grant. And at the state level, they're going to have their own policies. They're going to have their things that they're going to look for. But typically, yeah, it's certainly an individual can apply for it.
Is there a resource you would recommend to get a sense of what might be available?
Yeah, I think you just kind of have to go at look at the state level. I wish I could speak more on it, but again, I'm just not familiar with every state and their programs.
Gotcha. Okay. Well, let's end there. Ryan, thank you so much for joining us. Thanks to everyone who took the time to join us today. We certainly hope it was helpful. As I've mentioned, we will make this recording available, and our emails are up on the page right now. Please feel free to reach out to either one of us. So again, Ryan, thank you for your time, and thanks to everyone who joined us today.
Thanks, everyone.